Hello everyone, welcome back to my channel. In this video, we'll review week 3 in finance 5512, equity market 1, equity and the corporation. So just as the previous video, to begin with, we'll discuss the textbook outline, week 3 textbook outline first. So let's go. So I just need only thing I need to is let me just outline here. So I just read about why I need to copy first. So for the first part, equity market, we'll discuss. Sorry for wait a minute. Give me 0 minutes. Now I need to open the widget because I need to cut the screen. I need to know whether it works. Loading. Great. So to begin with, we are talking about the corporation, different business for agency problem and the solution, and the corporate objective. Agency problem is the different if is the segregation of rights between the management and the shareholders. And then in the stock exchange, we discuss primary market role, secondary market role, management products role, derivative product role, interest rate market role, traditional trading and settlement role, and trading and settlement role, information role, regulatory role, and private equity market. So in the stock exchange, we discuss this role as the primary market, secondary market, management products, derivative product, interest rate market role, and trading and settlement. There are lots of roles in stock exchange. So it's very for the student, for the professor, it's a very good chapter and knowledge to test us to test out whether we have whether we have acquired the knowledge. So in next part, we'll discuss the financial decision, business risk and financial risk, and IPO process, business and financial risk. And the next is the equity funding alternatives. There are several ways for us to fund. So in my perspective, it's my first time I started recording the lessons on the OBS and uploading it to the YouTube. So it's very impressive. If time permits, I'd like to review the previous video. Yes, and next part is the investment decision, capital action, NPV formula, method and calculation. We need to know the NPV, how to calculate NPV, and the IRR, internal rate of return formula, and the methods. Yes, it also involves several calculations for us to remember. So maybe a little bit difficult as well, but it's not so that it's not that tough. I mean, so delete the term. So let's do the vocabulary list. Let's do the vocabulary list. So the first one is the board of director, LLC, limited liability company, no liability company, participating share, principal, agent, agency problem, takeover, share options, corporate governance, cleaning and settlement. Okay, in this part, we need to make it back to the sorry for that, to the ultimate mass settlement. So what's wrong with this? And this should be back to highlight, no color, clearing and settlement, stock exchange, dividend. What does that mean? Dividend, prospects, broker, market capitalization, liquidity, ETF, exchange trade fund, over the counter OTC, hinge. Oh, we have discussed hinge before. Benchmark, structured products, transparent, buyback, delisting. Yes, it contains lots. It's much more than below. So we need to copy here, delete below, in here. I think it's enough. Delisting and the system risk, unsystemic risk, floating risk, non-conventional, cash flow, promoter, underwriting, dual listing, double listing. What does that mean? I don't know. Right issue, renounceable. Yes, it's a. I think the concept is very important in this chapter, so we need to pay attention to this chapter and the term. And next one is share purchase plan. Oh, do not open record. Yes, start recording. Volatility, preference share, cumulative, redeemable, convertible, participating, capital structure, correct, later rows. So let's go. For the GPT part, we need to first take over share print, corporate government, closing settlement, stock exchange. So it's to some extent it's easier parts for us to step into the topic. So let's go. Its meanings: a group of individuals elected by agent to oversee make annual company. LLC, company where shareholders are only liable for amounts invested, not personal assets. Company where shareholders are not required to pay shares. What that means? A company excuse me, where shareholders are not required to pay unpaid share and can forfeit them instead.
A company, common in mining, where shareholders are not required to pay unpaid shares and can forfeit them instead.
I don't know what that means. And can forfeit. Ah, that's weird. Shares for which investors have only paid part of its share price and may need to pay the rest later. Principal: the person entity to another person on their behalf. Agent is a person entity authorized to act on behalf of the principal. Agency problem: a person or entity authorized to act on behalf of the principal. Principal and agent. Agency problem is the conflict between the principal and the agent. The conflicts between the principal and agent take over Yes. Control purchasing majority of its share. Share option. Sorry. Financial contracts giving the right but not obligation to buy or sell shares as a price, set a price in future. Company governance is the system of rules and practiced by which the company is directly and controlled. The system of the rules and practices by which a company is directed and controlled. Cleaning and settlement is the process of finalizing the company transaction, including transfer ownership and payment. Stock exchange, ASX, Australian Stock Exchange, correct. Marketplace where securities such as share. And the next one is dividend, prospectus, LTC, buyback. For make more in one go. Delisting system risks and unsystem risk. That's enough. Good. So we need to, the first one is dividend. Although it's payments made by company to its shareholders from profits, the prospectus is, what does that mean?
Prospectus.
Prospectus, including a formal document provide details about the investment offering includes. Sorry, IPO broke. So I'm just concerned how to pronounce this one. It's confused me lots of times.
Broker.
Market capitalization, the total value of company share market capitalization, share price and number of share. Okay. Liquidity. Sorry for that. The ease with which it can be quickly bought or sell without affecting its price. ETF, a fund trade a stock that trade an index or acid breaker. Fund ETF, exchange trade fund trade on the share market that tracks index or assets basket. OTC is the trade that occur directly between parties not on the exchange. Over is not in the account, called OTC. Benchmarking is standard reference for a standard reference point used to company investing or performances. Structured products. Sorry for that. Complex financial instrument combining diversified with other assets to achieve specific risk return portfolio. Yes, structured products. Correct. Transparency, the ability and clarify information in market allow investors to make informed decision. Transparency. Buyback, when companies should purchase its own share from markets. Delisting, remove the company's share from its exchange. Yes, delisting is, but I don't know, in letter there is delisting. In Chinese version. Okay, back to English one. System risk that cannot be diversified away. System depression. And system risk is companies that can be reduced through diversification. Correct. easy to understand. And the final one is the floating rate, non-convenience cash flow, and capital structure. Yes, I may in this part I pay attention to the versus the dual listing. Yes, in dual listing, maybe I think it's the commonly listed in two stock chain markets. This dual listing. Floating rate interest rate is that can be changed over time based on the benchmark. So the market interest rates, non-conventional cash flow. So what does that mean? Cash flow that changes sign more than once. Let's sign more than once. Negative, positive, negative make analyze like R more complexes. It makes the analyze more difficult parameter. Parameter is a person who is involved fund and set up a company. Parameter person it's the initial person who should underwrite the process where financial institution guaranteed to buy any unsold security in one issue. Dual listing is when the company listing on more than one stock exchange. That's correct what I said before. Right issue, treble collect, offer new share to existing shareholder usually at a discount, renounceable, rest can be sold transferred to other investable. Non-renounceable is cannot be transferred to another, must be used. Right, that cannot be sold or must be used or forfeited. Share purchase plan. Share purchase plan is the plan within share to buy additional share, often without broker fees. Volatility is the discrete variation price of financial assets over time. Risk indicator is a risk indicator. Preference share. Preference shares. Cumulative. Sorry. We have unpaid dividend accumulated must be paid later. Redeemable shares that can be bought by issue company that can be bought back in the rate at a future date. Convertible can convert another type. Normally it's often bond to share. Normally in this type is called convertible. Next one is participating. Share that allows shareholders to extract beyond the share that allows to extract dividends beyond the fixed rate. Capital structure, the mix of dividends and equity used by company to sorry for that. The mix of dividends by companies to finance its operates. So I think that's all about the vocabulary list, and there are several things I need to add up that you need to pay attention to in the in the lecture notes. So we need to follow the tips in the notes. Tips in the notes slides. So first one is so let's go back to our slides. Share market. The public company is company on the formal stock exchange, different from company form ownership. The corporation differ from other business form. Ownership is widespread and either transferable. They differ from other. Shareholders do not affect day-to-day affairs of a company, so it differs. Advantages of the corporate So we can illustrate in the completely from the in this part. It's not advantage, it's just the feature of the next one would be the LTM market. So there are many rows into the row of, so the next secondary row of the stock exchange. So the first one is the primary market row. Simply primary market. So its primary market row stock exchange facilitates the new issuers, row sales for new that securities, issue, placement, issue of new policy is select. And the secondary market row is facilitates the trading existing financial securities, no new funds, and it's private equity. Oh, I don't mean that. It's primary. Yes, it's a illustration of the private equity market, private market, and corporation in the share market. So there are other. I'm curious. There are 3 rows left. We just need to. We have to put it in here. Manage it. Project row, derivative market row, interest and the rate market row, trading and settlement row, information row, and the regulation row. That's all. Regulatory row. And the next part we'll discuss about the goal of the corporate. Yes, obviously the goal is to maximize the wealth of shareholders. So the 4 main financial management is to be considered. 4 main aspects of financial management to be considered. That's the key question. So let's just make a slight illustration with the picture. Screenshot is enough. So the first one is how should the financial risk manage to fund investors? What investment should be on what investment? How should the financial risk money? What investment? How to manage the assets and liability, and how the firm pass the return to shareholders. Great. Financial decision, DTD ratio, and EPIDO. It's answering first question. How should the firm raise money to fund investment? IPO is good enough. Only the share is non-liability. Company shareholder are paid on a public pay, typically use high speculative interest. And next is the equity fund alternative. It is explained in the vocabularies. In the next week's notes, we'll detail discuss how to calculate the right issue, placement, dividend revenue, and preference share. Completely, yes, it's very important. The placement. So I think we do not discuss the placement before because I have no idea. So we discuss the placement. So we need to pay attention to the placement for additional new shareholders issue directly select state investment shareholder. Usually select small accounts. Shareholder non-relevant. So there is pros and cons of this method. So let's copy it. Great. The 5 years reinvestment schedule, performance shares, convertible notes, It's very obvious. One or two maybe not non-detectable or detachable.
Non-detachable.
Detachable. Decision, investment decision, non-invest. So that's what I really want to know. It's NPV. In that case, we need to know the NPV, the difference between the preference share and the running share. That's the calculation. Though it's a very basic and easy to understand, it's very important. And the next one is the IRR. We need to pay attention to this as well. If IRR is bigger than rate of return, it's the decision rate where it's a discount rate that results in the NPV equal to 0. If the IRR is bigger than the rate required to return, we can accept the. So that's the two very important formula in here, NPV and NRR. Actually, yes, that's what I want to say. Great. It's week 3 review. It's very important as well, similar to week 3 or week 2. And next time, week 4 is I think it's the most important one in the midterm quiz. So let's all goodbye.